What's up, YouTube? This video is brought to you by Webull. If you'd like to help out the channel and get 2 free stocks, make sure you check out my link below. Hey, I'm Chris Saint, and if you're new here, I make videos on personal finance and how to invest and build wealth through the stock market. I started this Robinhood challenge for 2 reasons. Number 1, I wanted to simplify investing for those that wanted to invest but didn't quite know how. And number 2, I wanted to show you guys in real time the companies that I invest in to grow my portfolio from $0 to 10K and then eventually from 10K to 100K. So feel free to join me on the journey by grabbing some free stock using my link below, or sit back and watch. Either way, I appreciate you. Today's video is about a stock update, guys. We have hit some home runs, man, and I'm excited for each and every one of you. I got all the texts today. I got all the emails today. You guys been hitting me up all over social media, telling me about JMIA, telling me about Nokia, telling me about Neo. And so I wanted to come on here not only to celebrate, but just to tell you guys the importance of following somebody that's going to give you the game the right way. Man, these wins will be something we'll continue to have as long as you guys continue to listen, invest the right way, and make smart financial decisions, okay? And so, guys, without further ado, let's take a look at my portfolio today, and then let's jump into how some of these stocks did on the day. Guys, the portfolio is currently sitting at $39,239.47 on the day. Almost 1%, pretty good. On the week, guys, we are up 2.9%, almost 3%. 1 month out, we are up 6%, almost 6.5%. If I take you guys 3 months out, we are up over 18%. If we go out 1 year, even though I haven't had this account 1 year, we are up 13.8%. And if we go out all time, we are up 13.8%. Guys, you know, if you've been rocking with me, I started this account in January, man, to show you guys how to properly invest and build a portfolio. I thank you each and every day for being here and rocking with me along the journey, man. Listen, guys, today the market was booming. We hit a lot of home runs if you bought the stocks at the price points I told you to buy them at. And so I wanted to come on here today and kind of celebrate with you guys because, man, I'm all about seeing you win. And so when you guys win, that's the thing that makes me the most happiest, okay? Again, I told you for the longest of time we've been playing the wrong game, but I'm a firm believer if you guys have the right person teaching you how to properly invest, what to invest in, what price points to buy stocks at, I'm guaranteeing that we can dominate the stock market. I've been doing it for 10 years. I started this channel in January just to show what I already been doing in my other life, to show you guys how many people we can bring along this journey to make sure that you guys win as well. Starting with JMIA, ticker symbol JMIA, it is up $21.50. You guys know I put you on this at 13. So I'm just happy if you guys have invested in this and have seen this type of run up from the time we talked about this stock. Guys, this is something that we can rinse and repeat often in the stock market. Guys, there will always be a bear market somewhere. There will always be a stock ready to pop. So if you guys are willing to listen, if you guys are willing to make smart investments, you can do this often throughout the course of the year. And I'm telling you, because I've been doing it a long time, you do this enough times, before you know it, you'll have $10,000. Before you know it, that 10 will turn into 30,000. Before you know it, that 30 will turn into 60 or 70. And guys, this is something you can do when you invest in the right way, as well as when you invest in the right company. We had a great run up here, and the next one we want to look at is Nokia. Those as you know, we bought Nokia around $4 mark, $3, $4. And so today they have finally cracked over $5. And so again, this is another run up for some of you guys that's in this. They're up 5% on the day. On the week, they're up 17%. Guys, I'm telling you, you don't get 17% just out of nowhere. This is about being smart and strategic with how you invest and what price points that you buy stocks at. Don't get caught with the fear of missing out and you buying these stocks way too high. Please, please listen closely to the price points that I put out there when I tell you about a stock, because that's what truly makes the difference. It's one thing to just buy it because I mentioned it. It's another thing to buy it at the price point that I say, hey, we need to get in and get our 125 established at this price point, because that's how you make the true gains. That's how you grow your wealth. The next one and the final one on today we're going to look at, guys, is Neo. Ticker symbol NIO. This one is currently sitting at $13.56. Listen, man, I wish we had the ability to go back and just talk to all the analysts that told us that this stock was going to drop to $7. I'm thankful for you all for listening though and sticking by me, because I told you guys they were trying to scare you. They was trying to throw you off with scare tactics. And I told you, man, when you know good companies, they're not going to drop to $7. They can drop if the whole market crash, like the corona made the market crash. That's possible. But just some random, no news, the stock going to drop to $7. That was a scare tactic for you to sell off so you can make them billions of dollars. This stock is again over $13.50. You guys know we bought this stock at $7 and below. So I'm knowing that you guys are hitting home runs because I know the price points that I told you guys to buy these stocks at. And if you did that, then I know we already winning. So man, I just want to tell you guys to keep up the good work. Keep making smart investments, and guys, let's continue to run it up together. Next up, guys, our word of the day is quantitative easing. Guys, you might hear QE. They're saying quantitative easing when you hear the word QE. That's just short for, simply put, that the government is buying and infusing cash into the stock market. I told you guys we are in a recession, and you guys should be more happy that you're dominating in a recession. Imagine if this was a real bull market with all the stocks that I've told you guys about. We would really be up way more. So guys, look, we are in a recession, and I'm teaching you guys how to dominate in a recession. The one thing that's keeping the recession from feeling like an actual recession, or 2008 for those of you that may have been investing back then, is quantitative easing. Okay, the government is buying bonds, the government is buying treasuries. They're doing stuff to stimulate the economy to keep it from being where it should be, which it should be down. I have mixed feelings about it because I know millionaires are built in the down market, and I have all kind of cash on the sideline ready to buy in a down market. However, they've been keeping the market propped up, and as a result, I have to invest in a whole different strategic way to help you guys get gains in a market that should really be down. But that's what quantitative easing is, guys. It's just simply the government bonds and other financial assets being injected into the stock market. Okay, so if you hear QE on CNBC, or if you hear quantitative easing, that's all it's talking about. It's just like somebody throwing money into the stock market to keep it propped up. Next up, guys, we have our question of the day, and our question of the day comes from Alex Takis. He says, hello, Chris. I have two quick questions. What do you consider applicable time frames for short, mid, and long-term investments? And then he said, how liquid are you right now? I've been throwing money into my savings instead of the market for the past 2 months and have reached my goal of 25% liquidity in preparation for another big dip. But it's difficult staying out the game. I love to hear how you manage your investments. Thanks for everything you do. Alex, I thank you for this question. I'm going to reply to you in the comments, but it was so good I wanted to add it to this upcoming video right here. And so listen, man, to tackle question number one, which is what do you consider applicable time frame for short, mid-term, and long-term investments? Guys, a short to mid-term investments could be anything from 1 week to 3 months. That's what a short-term play is when you hear us talk like that. 3 to 6 months is a mid-term play, and anything 6 months or longer is considered a long-term play. Long-term plays, when I'm talking about them, I'm talking 1 to 3 years and 3 to 5 years. Like for instance, Neo will go to 300 for those of you that have the patience to wait, but it might be a 2 to 3 year wait on that to happen. Okay, I'm that type of investor. I told you guys I bought Tesla at 150 and I saw Tesla go up to 1700 because I know in advance what all stocks will do, most likely, long as the CEO doesn't mess up too much. And so you can do that too. So midterm, short term, and long term are the different milestones you have. You have to decide for yourself, what kind of investor are you? Are you trying to make a quick dollar? Is it a quick flip for you? Do you have a different time horizon? Can you wait 3 to 6 months? Or can you wait a year like I do? So great question for number one. And number two, how liquid are you right now? I'm throwing money into my savings account. Listen, man, I'm gonna tell you guys a quick story. I don't use bank savings accounts. If you really want to know where my money is at, I might put it in Nike. I might put it in Wells Fargo and the stock, okay? Because the stocks, earn a better dividend yield and a better yield overall on your money than putting your money in a bank that's earning 0% interest. And so that's just a quick rule of thumb. So if I ever need money, I can pull it out of those stocks, which I know I'm not looking for those stocks to do nothing. I'm just looking for it to hold my money, because my money will grow more sitting in one of those great quality stocks and great value stocks than it would sitting in a bank. So that's just a quick tip. And so I always keep 20-30% on hand ready at any given time for a potential dip, which is what I'm always waiting for, because that's where the money is made. However, I do have my emergency funds in a bank, but I also have money in ETFs, Roth IRAs, and different things like that to make sure that I'm fully insulated from a wealth building standpoint. So great question, Alex, man. Thank you for this question as well as this comment, however you want to term it. But I had to add it to my video because I thought it was that important for you guys to hear this information. Listen, man, if you have questions, leave them in my comments below. I'll grab them and add them to my next video. Listen, man, I make videos like this every week. So if you like this one, make sure you check out the next one. Remember, most people see the end result. Very few consider the journey. Do me a favor. Don't forget to like and subscribe to the channel. Make sure you grab some free stock using my link below. And I'll see you guys in the next one.